Okay, first of all, let me share with you the agenda of the today's session, that what we are going to do in that particular session and what is the purpose of this session. So first of all, remember, this is the practice to pass webinar. This is the game-changing webinar. And why I call it as a game-changing webinar, because here this is the right time, just before few days before the exams, that is approximately 15 to 20 days before the exams. We need to consider, we need to rethink about the strategies that we are following right now in order to ace our exams. So it means that if you want to attempt or appear for the financial reporting paper, you need to reanalyze yourself, that whether you are preparing yourself, whatever the strategy that you are opting right now, is it the good strategy? Is this the right strategy that you are opting for? Are you sure about this one, that whatever the strategy you are having, is this strategy going to give you the benefit in your exam? So that is something that you need to reconsider. For that purpose, today in this session, what I'm going to do, I'm going to discuss with you the past examiners report. Yes, boys and girls, it's very important to identify that what happened in the past and what examiner has commented. Remember that every half year, the examiner issues the examiner report, in which examiners highlights the key mistakes, the important points, and the few outcomes of the students or the candidates, or the loopholes that were performed by the students in the previous exam, in the last exam. So examiner always issues the half year report, in which the examiner highlights the key problems that were faced by the students or the candidates in their previous exams. So it's very important to read, it's very important to understand that what went wrong, so that we as a candidate that we are going to appear for the upcoming exams, we should not repeat those mistakes. So I'm going to discuss with you that particular examiner report with you guys, so that you can enhance yourself, you can upgrade yourself, you can analyze that what the previous students made the blunder, that you should not repeat those mistakes again, so that you can ace your exams in a very best way. With respect to that examiner report, I've already made a video on the examiner reports of the last attempts, like for the March June 2024, September December 2023, March June 2023. So it's available on my YouTube channel, so definitely you can review on those particular examiner reports. Although what I have done, I have compiled all the examiner reports at one place, so if any of the students want that particular examiner, that candidate, definitely contact me. At the end of this session, I will also give you my WhatsApp number, so that you can message me, you can just drop me a message. I'm going to share you with those reports. Okay, now what we are going to do in this particular session, first of all, whenever the examiner reveals the report, it always reveals the most difficult or the challenging question. Mark my words, what I said. Examiners highlighted that these were the challenging questions. These were the challenging questions that were given in the exams. Yes, these were the challenging questions that were given in the exams, and most of the candidates around the globe, not only in Pakistan, not in India, not in Asia, but all over the world, many of the students did perform worst. It means that these were the most difficult questions. So what I have done, I have compiled all of these difficult questions, and today in this session we are going to discuss all of these difficult questions. But remember, we are not only going to discuss the particular question, we are going to discuss that particular standard as well. That's why, if you can see my window, if you can see my screen, that I have highlighted the topics that will be covered. I didn't say that the questions that we'll be practicing. No, I will try to give you the recap of that particular standard. For example, the question number one that we will perform is related to IS 20. First, I will try to give you an overview of the IS 20, that what IS 20 is and what is the particular or the relevant accounting treatment, and then we are going to perform that particular question. Same goes with the consolidation, that is the disposal area was tested in the last attempt, that is September December 2024. So in that particular case, what is the consolidated disposal, how it should be recorded, and then we will move on towards that particular question and we'll try to answer that one. And remember, this is the practice to pass. This is something that we are going to practice. So practice will always be a two-side communication. This will not be the case that I'm speaking, I'm louding, I'm shouting, and I'm solving the questions solely. No, this will not be the case. Obviously, you guys will also be participating in that particular webinar. So I'll be asking you to solve the questions. I'll be asking you to respond to that particular question so that you guys will prepare yourself. You guys will have a very better preparation after solving this question. And remember, these are the questions that I'm going to start. These are the most difficult questions. This is not what Junaid Khalid says. No, this is something the ACCA examiner states that these were the most challenging question, and majority of the candidates mark that question as incorrect. So it means if you are not able to solve that question, so you should not worry. You should not take pressure on yourself that I was not able to attempt that particular question. Oh, what, my bad. What should I do? Please don't confuse. Don't have a panic attack. If you're not able to do that one, doesn't matter. You just need to learn. You just need to upgrade yourself. That's it. And if you are able to solve that particular question, so most welcome. You are welcome. You are, I would say that congratulations that you are prepared. You are well prepared for your exams. So I should cater both the students, the one who are able to attempt, the one who are not able to attempt. Please stay positive, be positive. It is not the right time to bring negative thoughts in your mind. Now, this is the right time to bring positive vibes, the positive insights. Please stay away from the negative people. Those people who says that it's impossible, you can't do it. It's a very short period of time is left. You will not be able to solve the question. You will not be able to ace your exams. Please stay away from these kinds of negative people. Even if you have started the financial reporting paper, I can guarantee on this one, you can do it. Yes, you can do it. Yes, you can do it. I repeated that statement for the 3 times, so you can do it. So please believe on yourself and believe in Almighty. Inshallah, you are going to ace this exam. So without wasting the time, let's move on towards the first question. And remember, I told you again and again, examiner has highlighted that this is one of the most difficult questions. Majority of the students were unable to answer that particular question correctly. So first of all, let me read out the question first. Let me read out the question. Let me read out the question first. The question number 1. And remember, this is not I will be solving the question. We will be solving that question. I'll be assisting you. Remember, I am not here to appear for the exams. You guys are going to appear for the exams. So the practice should be from your side. But yes, once you will lack somewhere, I'm going to guide you on that particular matter. I'm going to guide you on that particular situation. That no, this is the wrong approach. You should solve this question in a different way, in a different manner, in that particular manner. Now, let me read out the question for you guys, and then you guys will be trying that particular question. Okay. So, Deferred company buys a new equipment on 1st of May 2005. Okay. Whenever I read a question, it's my habit. It's my habit. I always consider the year-end requirement. I always jump to the accounting year-end. That when my accounting period is ending on, if you just see that the accounting period is ending on 30th of April 20x6. This is my habit. Whenever I read from which standard the question is, I always try to highlight, first of all, that what is my accounting year end. So my accounting year end is 30th of April 20x6. Now, let me repeat the question from the scratch. Parent company buys a new equipment on 1st of May 2005. Okay. It means that is at the beginning of the year, right? Am I right? If you guys could please answer me that this asset was purchased at the beginning of the year. That is on 1st May. If my accounting period is ending on 30th of April, so obviously the accounting period will be starting from 1st of May, right? Okay, great. At a cost of $500,000. Nice. Depreciation is 20% per annum on straight line basis, and the asset has no residual value. Always what I say to my students that whenever you appear for any exam or any question or any section, there are 2 statements that are very impossible. You can't say that I didn't know about the paper. I didn't know anything from the paper. It was impossible for me. I was 0%. I was 0%. I didn't know anything from that paper. I don't know what went, what happened. This is the first statement. And I mark that statement as incorrect. That is impossible. This can never happen. If the student says that I didn't know anything from the course or I was not able to understand anything from that question, I would say he or she is a liar. It's impossible. How is it possible? if you have spent a time, if you have spent hours and hours, you're working hard, you're learning, you're taking classes, you're taking lectures, you're practicing, you can't say this statement. You're a liar. There will always be some area. For example, I read out that question, that first part. If I ask you that whether you are able to understand, you will say yes, perfect. Asset was bought on 1st of May. That is at the start of the year. The cost is 500,000. Scrap value is 0. 20% is a straight line method. That is something what I am getting it. So that is, you can't say that I didn't got anything from that particular question. You're a liar. Once you got this one, it means the 30 to 40% of the information that you are getting it. So please stay positive. Don't say that I don't know anything from that particular question. I don't know. I don't know how to solve this question. Always try to give your best. At least you started. Once you will start it, 80% of the times, remember, once you will start it, you will see the result, that you will ending up that question and you will be solving that question at your own, even though the answer would be incorrect, but your concepts, 80% of the concepts will be right, will be perfect, will be correct. So it means try the question. Please never leave the question. If you just see the options over there, it seems like a nightmare. That there are so many boxes. Oh my God, what should I do? Oh my God, there are so many boxes. There are 2 empty boxes. What should I do? No, this is not my cup of tea. Let's move on to the next question. No, don't do that. There is nothing impossible. Always try to read the data, grab the information, try to fetch the information from that particular question. Second paragraph, the company received the government grant from which standard, in which standard we are entering into. Please let me know through the chat box. I just want you all to participate. In which standard we are entering into? IAS 22. Very good. Vanshita, very good. Fahim, excellent. Hamna Batul, excellent. It's IAS 20. Very good. Of $150,000 in respect of the equipment, the company has received the cash. It means this 150,000 was received in respect of the equipment. Which grant is it? There are two types of grant covered in IAS 20: revenue grant and asset grant. Can you guys please let me know that if this amount was received? Yes, very good, Vanshida. Uruj, excellent. Fatma, very good. Arusa. Yes, it's an asset grant. Everyone, very good. It's an asset grant. At times, it is also known as capital grant. Very good. Why? Because if you have purchased, or sorry, if you have received the grant for the purchase, I repeat my term, for the purchase, acquisition, these are the terminologies, wordings used by the standard. If you have received the grant for the purchase, acquisition, or exchange of asset, so this will be treated as an asset grant. Now, what is revenue grant? Other than asset grant, all grants should be recognized as revenue grant. I repeat, other than asset grant, all grant received shall be recognized as revenue grant. Now, the company has received the cash and recognized the grant as deferred income. My God, my God. Here the examiner is giving you a hint. If the grant was recognized, as a deferred income. So there are two methods basically. That is, under the asset grant, there are two methods. Number one is the gross one, and the second one is the net method. Which method are we going to follow? Very good, Aruj. Vanshida, excellent. Mahim, very good. Arusa, yes, it's a gross method. Why? Because here examiner is not stating that the company is using the gross method. No. It indicates that in the gross method, we recognize the deferred income. But remember, in the net method, we do not recognize the deferred income. What we do in the net method, we deduct the amount of grant from the non-current asset. But here, the deferred income method, it means the gross method is used. Now, what is the requirement? What amount will be included in the financial statement? For the year ended 30th April in respect of the above transaction, it means that at the end of the year one, remember the accounting period started on 1st of May 20x5 and it ends on 30th of April 2006. Now, what amount should be recognized in profit or loss or the current liabilities at the end of the year? At the end of the year. Now, what you have to do, this is also known as drag and drop. When you will be giving your computer exam, so what you will be doing, you will be selecting the option from the left side, yes, and clicking on that one and dragging the option to the correct box, and you will be dropping it over there. So this is known as drag and drop, drag and drop, drag and drop. Now, if you guys please try and let me know that what should be the answer for this one. Yes, everyone, please. Okay, Fahim, let me. I'll be solving, Fahim. I'll be solving that particular question. So I'll be giving the explanation over there. Don't worry. Okay, Fahim. Vanshita, okay, 100,000 credit in PNL. Okay, nice. PNL 100,000, current liability 30,000. Okay. PNL 70,000, which is debit. Okay, it means, okay, debit means an expense and credit means it's an income. Okay. 30,000, Maheen, credit balance, current liability. Okay, nice, very good. I want everyone to please participate in that one. It's a game-changing webinar. We are going to change the game. And how we are going to change the game? By practicing it. My ultimate motto and my ultimate target or the punchline or the buzz line is practice. That's it. If you want to ace this exam with good marks, practice. Vanshita, 30,000 credit in current liability. Okay, nice. Very good. We'll see the answer. We'll solve it. Don't worry. Okay. Anyone else? Hamna Batul. PNL 100,000. Okay. And also clear it as a debit balance or the credit balance because this is very important. Okay. Now you guys have solved it. You tried it. Nice. Very good. Now let me see. Let me check that what is going to be the correct answer for this one. Okay, great. Now, first of all, by the end of the year, we are going to make two adjustments. Remember, we're going to make two adjustments. And what are these two adjustments? Number one, first of all, we have recognized the grant as deferred income. We have recognized the grant as deferred income. Now, what we have to do, we need to release. Remember, I use the term release. We need to release that grant. The deferred income that we have recorded is 150,000. 150,000 is the deferred income that we have recorded. Deferred income that we have recorded is 150,000. 150,000 is the deferred income that we have recorded over here. Now, what we have to do, that we will be releasing, because this is the first year end. This is the first year end. So we're releasing it. And remember, we always release the grant according to the method of depreciation, according to the method or the usage of asset. So it means the asset is depreciated using the 20% straight line method. So we'll be releasing the grant according to that method. It means the 20% amount will be released. So anyone, can you please calculate the 20% of 150,000? It's going to be 30,000, right? It's going to be 30,000, right? Okay, great. Now, this is something that will be recorded as other income. And other income means it shows the credit. Remember, income will always represent a credit balance. Debit will always in PNL, okay, not in asset or not in the balance sheet side, but for PNL, debit shows an expense and credit shows an income, that is revenue. Now it's 30,000 credit, that is an other income. One more adjustment that examiner has highlighted in their examiner report, that most of the students forgot to calculate the depreciation of the property, plant and equipment. Yes, It doesn't say that you need to show the figures related to deferred income only. No, what amount will be included in the financial statement for the above transaction. So it means we have bought an asset. So obviously we are going to depreciate that particular asset. So the property, plant and equipment is 500,000 and we are going to depreciate. We are going to calculate the depreciation expense for this one. We are going to calculate the depreciation expense for this one. So the scrap value is nil. Scrap value is nil. So 20%. 20%. Is this going to be 100,000? Okay, 100,000. So it means this 100,000, this 100,000 is representing the depreciation expense, and this is representing as a debit balance. This will be representing as a debit balance. This will be representing as a debit balance. It is the depreciation expense that we have charged. So now, 30,000 is the other income that will be crediting the P&L, and that 100,000 that will be debiting as an expense. So if you just calculate a net of amount, so 30,000 is the credit, 100,000 is the debit. So the difference would be 70,000 and we'll consider it as a debit balance, which means this will be treated as a charge or this will be treated as an expense, and this is going to reduce the amount of profit. This is going to reduce the amount of profit. So what amount that should be reported in the profit and loss? So it's 70,000 debit that should be reported in P&L. That should be reported in P&L as a debit balance. Are you guys getting the point? Ladies and gentlemen, majority of the students stated that the profit and loss 100,000 will be recorded. It means they forgot to entertain the other income. They forgot to release the deferred income into other income. Now you just see over here, that was a very basic question. I must say this one, that whenever I read or whenever I go through that examiner report, the question that examiner is saying that these were the most difficult question. Actually, what I find it out, that these are not the most difficult questions. These are the most technical questions, by the way. If you just see the data or the information that was given in that question, it was not that a difficult one. Nobody can say, oh my God, this is something that I'm not able to understand. No, this will never be the case. But you'll be making some very technical and very basic errors. Either you will not be reading the question properly, or you'll not be getting the data properly. So please read the data and the information thoroughly. Now, the second option, that is the current liability that we need to say. The total deferred income that we received is 150,000. Now, this year we have already released 30,000, which means the remaining deferred income or the remaining liability is 120,000, right? Now, remember, now there could be different requirements. For example, there could be another box in which in that box, the examiner might ask you that what will be the amount of total liability. That is the liability at the end of the year. So at the end of the year, out of 150, we have already paid 30. So the total liability is 120. And we know that in the next 12 months, yes, in the next 12 months, we are going to release the another amount and we are going to settle the another amount. That is again 30,000, because this grant will be released on a straight line basis. So obviously in the next 12 months, we will release the next 30,000 remaining out of 120. If the 30,000 will be releasing in the next 12 months, so the remaining, that is 90,000 will be releasing after 12 months. 90,000 that will be releasing after 12 months. So this 30,000 will be treated as liability. This will be treated as current liability. Yes, it's a liability, but it's a current liability. And the current liability always, shows the credit balance. The liability always shows the credit balance. But my question is, if examiner asks you that what will be the non-current liability, what will be the non-current, what will be the amount of the non-current liability? So what is going to be the answer for this one? Okay, Fatma, let me. First of all, give me the answer for this one. What will be the amount of non-current liability? Yes, this is going to be 90,000. Now there's a question. There's a question that why we are netting off the 30,000 and 100,000. Fatma, listen to me very carefully, okay? Listen to me very carefully. The requirement of the question, just because of the requirement of the question, in this requirement, the amount that will be included in the financial statement for the year ended 30th April 2006. Here the examiner is stating that what will be the net amount basically. The total amount that will be reported in financial statement. Now, Fatma, listen to my another requirement that examiner might ask you, that what amount should be reported in respect of the deferred income. Now, listen to me very carefully. What amount that will be reporting in P&L with respect to the deferred income? With respect to the deferred income, it means now I have specified, I have clarified you that I don't want the total amount. I just need the amount that should be reported in P&L related to deferred income. Fatma, can you please give me the answer for this one? That what amount should be reported in P&L with respect to the deferred income? With respect to the deferred income, if this is the requirement, so what should be the answer for this one? Yes, Fatma, please do let me know. Fatma, listen to my requirement very carefully. What amount should be reported in P&L, income statement? What amount should be reported in P&L with respect to the deferred income? What amount should be recognized in P&L with respect to the deferred income? Anyone else? If you could answer, please. What amount should be recognized? Yes, very good, Maheen. Uruj, excellent. Very good, Ahmed. This should have been 30,000. Very good, Kuratalan. This should have been 30,000. It means that if I ask you that what amount of deferred income to be reported, what amount related to deferred income that should be reported in P&L, so I would have answered 30,000 credit. If I ask you that what amount that should be reported in P&L with respect to non-current asset, with respect to non-current asset, what amount should be reported in P&L with respect, what amount should be reported in P&L with respect to the non-current asset? Very good. It should have been 100,000. But now, Fatma, I need your participation. If I ask you that what amount, that is the requirement, the main requirement of this question is, what amount will be included in the financial statement? It means it's talking about the overall transaction. That what amount should be reported in financial statement for the year end date 30th April. So what amount it should be reported in P&L and in the balance sheet, that is current liabilities. So it means we will be considering both the depreciation as well as the other income, the depreciation as well as the other income. So income is something that is credited. It means it's a revenue, it's an income. This will increase the amount of profit. However, the depreciation is an expense. This is going to reduce the amount of profit. So what we are going to do, we are going to net it off. That one is the income, the other is the expense. We just net it off. And once we net it off, so the amount of expense is greater. So this will be treated as an expense and this will be reported in this will be reported in P&L as an expense. This will be reported in P&L as an expense. Fatma, are you getting the point? Yes, everyone, are you clear with this one? So the answer for this one that we have solved it, that 30,000 is the current liability and 90,000 is the non-current liability. 30,000 is the current liability. 90,000 is a long-term liability. So the answer for this one is going to be 30,000, and obviously a credit one. Obviously a credit one. So 30,000 credit will be dragged and dropped to the main option. Karan, remember, whenever there will be a question, grant, that is asset grant, the question that is related to asset grant will always give you a hint. Examiner will always give you a hint that whether you use the deferred income method, that is the gross method, or the net method. This will always, the examiner will always give you the hint. Like in this particular question, examiner gave you a hint that the company is recognizing the deferred income, which means it's a gross method. Or there could be another hint as well. For example, the company will not reduce the amount of grant. Sorry, the company will not reduce the amount of grant from the non-current asset. Karan, can you please let me know that which method I'm going to use? The company will not reduce the amount of. The company will not reduce the amount of non-current asset. The company will not reduce the amount of asset. The company, no, Vanshita. The company will, yes, Fatma, very good. The company will not reduce the amount of non-current asset. The company will not reduce the amount of profit. Yes, it's a gross method. So this is something the examiner will always give you a hint. Deferred income, very good. Karan, are you getting a point? So examiner will definitely let you know. Okay, moving on to the next question now. Next question. Next question that we are moving on. Now, let's see. Again, don't forget that these are the challenging questions, guys. These are the challenging questions that this is not, I'm telling, this is not a Junaid Khalid says that it's a challenging question. You can see the examiner report from ACCA. My ACCA, you can download it. It's accessible to everyone. Examiner states that these were the challenging question and majority of the students were unable to answer that question properly. Now, question number 2, Willard Company acquired 90% of the process companies. Now, can you please identify the standard, the topic that we are going to put in? Yes, ladies and gentlemen, can you please identify? Can you please identify? Can you please identify? Yes, very good, Maheen. Excellent, Fatma. Very good, Vanshita. Amna, very good. Now, this is something that we are going to put into the standard, which is known as what? Consolidation. And not it's a consolidation. Let's see that what it says that. Let's see the requirement and the date of this question. Willard Company acquired 90% of the process company. Company's $3 million $1 ordinary shares. Remember, this is not an investment. Majority of the students made the blunder. They said that this is the investment. Please remember, this 3 million is given over here and there is no dollar sign. There is no dollar sign. It's a quantity of shares. It's a number of shares. Majority of the students are making the blunder on this one. They consider it that it is the investment. This is the amount of investment. Remember, there is no dollar sign with this 3 million. So this states the number of shares. This is something, the quantity of shares that the subsidiary company right now, the subsidiary company is having right now. Okay. 3 million is the number of shares and the par value is $1. On 1st of March 2004, and I told you, my habit is that I always try to read the accounting year end. I always try to highlight the accounting year end. The accounting year end is 31st of December 2006 and it was acquired way back on March 2004. It was acquired on March 2004. Goodwill on the date of acquisition was calculated at 10.2%. Great. And if you and the students, you must remember that the main part of a consolidation was to calculate the amount of goodwill. And here the goodwill is already given in the question. Now the question is why the goodwill is given there. Let's see the data. Let's read the data first. Non-controlling interests were measured at the fair value at the date of acquisition. Okay. Now let's try to analyze the data. Let's try to grab some information to our minds. First of all, the shares of S company, that is the subsidiary companies over given over here, that is 3 million shares are there. We have acquired the 90% shares out of it, okay? Out of 3 million, we have acquired 90% of the shares. Second, The goodwill is already given over here. Third, the company will be using the non-controlling interest. Now, let's move on towards the second paragraph. On 1st June 2006, wait. Ladies and gentlemen, the accounting year is ending on 31st of December 2006, right? And what we have done on 1st of June, the Mullard company disposed the entire shareholding in Bruce's company for a consideration of 46.5 million. Any one of you can please identify that what is that 46.5 million? Very good, Sayyid Ahmad Ali. Dispose, what is that particular sales proceed? Very good. The perfect wording, Vanshita, very good. It's a sales proceed, by the way. It's a sales proceed, by the way, that the company, the parent company has disposed of all the shares of a subsidiary company for $46.5 million. It means on 1st of June. Let me highlight it here. It's 1st of June 2006. It's a DOD. DOD stands for date of disposal. And it was disposed of with a sales proceed of $46.5 million. Nice. Okay. Goodwill had not previously been impaired. It shows that the goodwill that was at the date of acquisition, the same goodwill will be treated, same goodwill will be considered at the date of disposal. On 1st of June 2006, that is on the same date that we were talking about, Bruce's company's retained earning was 29.7 million. It means the retained earning of a subsidiary company, not of a parent company. The Bruce's companies, that is the subsidiary company, had a retained earning of $29.7 million. $29.7 million. And the non-controlling interest was $8.4 million. It means the value of NCI, the value of non-controlling interest at the date of disposal, that is already given, which is $8.4 million. $8.4 million. So that is the data that is given over here. But still, I'm unable to identify that what I have to do. What is the requirement of this question? So now let's jump to the requirement of this question. What is the profit on disposal to be used in the preparation of consolidated financial statement? Wait, guys. Please concentrate over here. In that particular topic, in that particular chapter, in that particular area, you must have learned about this one, that if you want to calculate the gain or loss on disposal, if you want to calculate the gain or loss on disposal, so there are two different strategies. We can calculate the gain or loss on disposal by using the individual, or for incorporating the gain or loss to the individual account, or we can also calculate the gain or loss for incorporating that gain or loss to the group accounts, that is the consolidated accounts. And remember, to calculate the gain or loss in both of the methods is quite different. It's quite different. So it means if the examiner states that calculate the gain or loss using, or the gain or loss that should be reported in the individual account of the P company. So it's a very simple and the straightforward formula. What is that formula? That is, you need sales proceed, and you just need to deduct the investment or the consideration transferred at the time of acquisition, and you will get the gain or loss for that should be reported in individual account. So it's quite simple. But examiner, here the examiner is asking for, the group profit. It means the profit that should be reported in group. The profit that should be reported in group. Now, what is the formula? What is the formula? Remember, I'm not reading out the data again. I'm just plotting the information of the formula over here. And what I will do, I will find out those relevant line items to the questions. If they are already present over there, I'm going to just copy and paste over there. Now, first of all, we need the sales proceed. That for what amount you have disposed of that particular subsidiary. For what amount that you have disposed of that subsidiary. Now, remember, let me give you the explanation for this one. What I'm doing, when I bought the subsidiary back in 2004, if you remember that I invested that amount and I bought that subsidiary, I invested that amount, I bought that subsidiary. And whenever I bought or purchased that subsidiary, what I got from that subsidiary, number one, the net assets. The net assets of the company that I have acquired. Number two, the most important is the goodwill. if you just analyze, if you just try to think over that one, that once you are acquiring a subsidiary, so you are acquiring two things. Number one, the net assets, the assets and liabilities of the companies, obviously. And the second one is the goodwill of that company. So you acquired the net assets as well as the goodwill. Now, in the same manner, if you are disposing of that particular subsidiary, so what we have to do, we are going to return back, or we are going to dispose of. What we are going to dispose of? We are going to dispose of the goodwill. We are going to dispose of the net assets. I repeat, once we acquired a subsidiary, we acquired the net assets. We acquired the goodwill. Today we are going to dispose of the net assets, or we are going to dispose of that subsidiary. So it means we'll be disposing it, or we'll be disposing the goodwill and the net assets of that particular subsidiary. But remember, we need the goodwill at the date of acquisition. No, 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 no. We need the goodwill at the date of disposal. The date at which we are going to dispose of. So we'll be delivering, we'll be giving that goodwill. And which goodwill? That is at the date of disposal. We'll be giving up the net assets at the date of acquisition. No, 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 no. We are going to deliver the net assets which are available at the date of disposal. So these are two things that we are going to deliver at the time of disposal. But remember, this net assets that we are having, it is not exclusively relates to the group. So we are going to deduct the fair value of non-controlling interest at the date of disposal. Why? Because the net assets that we are going to transfer to another company or to another person's, remember, we are going to notify it that all of these net assets are not related to us. So we just need to calculate the group. We are just going to calculate the gain of a group, that the gain that is related to group. So this fair value of non-controlling interest at the date of disposal will be deducted, and once it will be deducted, we are going to have a comparison with the sales proceed. Either there will be a gain or there will be a loss. Either there will be a gain or there will be a loss. Now let's try to solve this question. First of all, if I just make a draft format of it, so what will be the format? First of all, I need the sales proceed. In order to calculate the gain or loss, I need the sales proceed. Yes, and what is the amount of sales proceed? Can anyone please let me know? It's 46.5 million, right? It's 46.5 million. It's a sales proceed. Now, we need, number one, the goodwill. And we need the goodwill at the date of disposal. Can anyone please let me know that what is the amount of goodwill at the date of disposal? Yes, please. Yes, please. Nice, very good. Since there is no impairment, the same goodwill will be taken over here. So there is no impairment. So 10.2 is the goodwill. Number two, we are going to have the net assets of subsidiary company at the date of disposal. Now, do we have the net assets? And remember, whenever I talk about the net assets, it means net assets means the share capital and the reserve. The share capital and the reserves. The net asset means the share capital and the reserve. Now, please do let me know the net assets of a subsidiary company. Yes, everyone, please participate. Yes, everyone, please participate. The net assets of a subsidiary company at the time of disposal. Okay, Vanshita, 32.4. Anyone else? 32.7. Okay, Ahmed. Maheen, 56.7. You are giving the highest bid, Maheen. Let's sell out these net assets. 56.71. 56.72. Is there anyone to bid for the highest one? 56.73. Congratulations, Maheen. Now this assets belongs to you. You can transfer 56.7 million into my account. Okay. Maheen is laughing. She says that I'm not gonna give you 56 rupees. Okay. Now net assets. Net assets means the share capital and the retained earning. And we know that the retained earning at the date of disposal is already given over here, and that is 29.7 million, right? Everybody, everybody and soul, everybody and soul. Am I right? So 29.7 is the retained earning at the date of disposal. 29.7 is the retained earning at the date of disposal. 29.7. Now, one more thing that I need to undertake this one, that is the share capital. Share capital. And the share capital which is already given in the question, and that was at the start of the year. Here we go. The 3 million ordinary shares of S company, $1 is the par value. So it means 3 million is the number of shares and the $1 is the par value. So what are we going to do? That we are going to multiply 3 million multiply by $1. Can you guys please make a calculation for this one? This is one of the most difficult calculation. This is one of the most difficult calculation. Just see, you need to multiply 3 by 1. Okay, nice, very good. Excellent people, mashallah. Very good. Yes, very good, Karan. It's $3 million, right? It's $3 million. It's $3 million. So what is that $3 million? That is the share capital. So $3 million is the share capital. So the total net assets at the date of disposal, this is going to be 32.7 million. Am I right? It's 32.7 million. Okay, 32.7 million. 32.7 million. 32.7 million, right? Now, this is not the end. What I have to do now? We need to subtract the fair value of non-controlling interest at the date of disposal. Now, let's see if that information is given over here or not. So, the fair value of non-controlling interest at the date of disposal is already given over here, and that is 8.4 million. It's 8.4 million. It's 8.4 million. Can you guys please let me know 10.2 plus 32.7 minus 8.4 minus 8.4. Vanshita, that is the point. That is the point. That is the point, and that is the reason that we are deducting that 8.4. That we haven't acquired. We haven't acquired the subsidiary. This is not the wholly owned subsidiary. This is not the wholly owned subsidiary. So what we have done, that we calculated that the goodwill at the date of disposal is 10.2. The net assets at the date of disposal is 32.7. But what we have done, we said that no, this is not a wholly owned subsidiary. We haven't acquired 100% shares. So what we did, we deducted that 8.4 million from the net assets of a subsidiary company that does not belongs to us. Can you please let me know 10.2 plus 32.7 minus 8.4? Is it going to be 32.4? 32.5 or 34.5? 34.5. Okay. So 34.5 minus 46.5, right? 46.5 minus 34.5. So this will give you the $12 million, and that is the positive value which shows it's a gain on disposal. And remember, this gain on disposal will be reported in consolidated financial statements. Now you just see, it was not that a difficult. Yes, it's a group gain. Very good, Ahmed. It's not that a difficult or impossible question. None of the student can say this one, that this was an impossible question. No, but still many of you students answered it as incorrectly. That is what the examiner states, that majority of the candidate. Why? Just because of it that you didn't read the question properly. I told you, my observation related to that or those difficult questions is that students are not reading the question properly. They are not reading the question properly. They are not interpreting the question properly. They are not getting it. They are not jotting down the data and the information that is given in the question. Is there any confusion in this particular question? So please do let me know. Yes, everyone, please participate. So for the candidates, those who are not participating, Deepak, are you with us? Drishti, Sanobar, Vandana, Uruj, are you guys clear with this one? Nice, very good. Now let's move on towards the next question. That is question number 3. And please don't run, don't panic after seeing that data information, after watching that information, after looking at the data or the structure of the question. Many of the students say that, oh my God, this is a very difficult question. There are so many columns and the tabs. How are we going to attempt this one? Please don't panic. Now let me solve this question. And first of all, I will ask you that from which standard this question has been taken. So you must have information for this one, okay? Tint company has capitalized the development cost of $6 million. By reading out this information, can you guys please let me know that from which standard, from which area, from which standard this question has been taken? Very good. IS 38. IS 38. Karan, I didn't got your question. If you could please specify the question that what you're going to ask, what you want to ask. Okay, now. So this is yes, really from the this is from the IS 38. That is the intangible. We can also call it research and development. Now let's see what it is. $6 million is the development cost that the company has incurred, and the name of the project is Project Atlantic. In its statement of financial position at 31st December 2002, the company began selling the product in 2003, that the company will start the production in 2003. As reliably estimated the following expected unit sales, that these unit sales will be or these are the products, these are the units that will be selling in the next 3 years, in the next futures, that is 2003, 4 and 5. There will be no sales after 2005. It means after 2005 this asset will be obsolete and will have no benefit of it. What amount should be charged? Now, Fatma, if you are with us, please read that. It states that what amount should be charged. Charge means that what amount should be recognized in P&L as an expense. The charge means P&L, that is an expense. What amount should be charged? That is an expense to the statement of profit and loss for the year ended 31st December 2003 in respect of this development cost. Now, remember this development cost of $6 million, this will obviously be recognized in the balance sheet as a non-current asset. This is an intangible asset and it should be recognized in the balance sheet. It should be capitalized as a non-current asset, intangible non-current asset. But remember, it states that related to that development cost, what amount should be charged to P&L? For that, we need to calculate what? For that, what we need to calculate? What we need to calculate? Very good, Ahmed. Fatma will look into that one. Yes, what we are going to calculate? According to the requirement, it states that the development cost is 6 million and related to that development cost, what amount should be charged to P&L? So what is that we need to calculate? Very good, Maheen. No, we are not going to simple prorate, Fatma. Just listen to me very carefully, okay? So we need to calculate the amortization. Remember, IS 38 states that when the asset is available for use, when the asset is available for use, it means now what we are going to do, we are going to start the amortization. Amortization. We are going to start the amortization. Now, what is amortization? It is basically, remember, majority of the students are having an incorrect concept of depreciation and amortization. Okay, Karan, I will address your question sooner. Okay, let me finish this one and then I'm going to answer this one. Okay. Okay. So the development cost is $6 million. So what we are going to do? We are going to amortize. And what is amortization? Amortization is basically it's an allocation of cost. Remember, please listen to me very carefully. Allocation of cost over its life. And remember, it is same as the depreciation. And remember, if it is the amortization or the depreciation, IAS states that you need to allocate on a systematic way. In a systematic way. What does it mean? We are going to allocate in a systematic way. What does it mean? Listen to me very carefully. For example, I have $5,000 right now in my hand. For example, sir, I can't see it. I said example. Very good. And what I've decided that there are, let's say, 18 participants in a meeting, and I want to allocate this $5,000 to each participant. For example, I said, okay, out of $5,000, I will give $200 to Karan, $500 to Vanshika, $50 to Ahmed, $5 to Arusa, and $1 to Maheen. So what I've done, and Ahmed, yes, Ahmed, you will also be in a queue, so I'll be giving $2 to Ahmed as well. Now what I'm doing, I'm allocating it, but that is a random allocation. That I'm making it out. IS 16 and IS 38 states that no, this should not be the case. There should be a systematic allocation. Don't allocate in a haphazard way. Always allocate in a systematic way. And systematic way means that allocate the cost according to the use. Now, if you just see in that particular question, very good, Fatma. In that particular question, it states that if you can see that the life is 3 years, that development cost will give you a benefit for 3 years. If that information for the sales unit was not given in the question, so we must have divided that 6 million over the period of 3 years, and we must have recognized the amortization of 2 million. I accept this one. But here the examiner has clearly indicated that 6 million will generate the sales unit 144,000 in 2003, 120,000 in 2004, and 96,000 in 2005. So what we are going to do, we are going to allocate that 6 million in the same way in a proportion to the number of units. That is 144 multiplied by 144 divided by total benefit that we're going to avail from this one, that is 360. Again, 6 million multiplied by 120 divided by 360. Again, 6 million multiplied by 96 divided by 360. So anyone please calculate the amortization of the year one? Anyone please, can you calculate the amortization for the year one? $2.4. Yes, it is going to be 2.4 million. So the answer for this question is that we need to consider the amortization of the year one only. So it means 2.4 million is going to be the correct answer for this one. Okay, Ahmed. Sir, if 6 million was before 31st of December, then 31st of December, then we must have amortized. I couldn't get your answer. I couldn't get your question, Ahmed. If that 6 million was before 31st of December, it is basically right now we have already incurred the development cost of $6 million, and that was already presented in the financial statement, and states that this will be in action. This will generate the benefit from 2003 onwards. So amortization will begin when the asset is available for use. So this development cost was already incurred in 2002. If you just see the data of this question, but we begin with the amortization when the asset is available for use, that is in 2003. You can ask that question, for example, if the production was started in 2002, okay, we must have started the amortization in 2002. And obviously, the examiner will give you the data or the information that how many sales units were there in 2002. Ahmed, are you clear with this one? No problem, Ahmed. Are you clear with this one, Ahmed? That is very important. That are you clear with the concept now? Everyone, please do participate. Do let me know whether are you clear with this one. Thank you so much. Okay, let's move on. Let's move on towards the next question now. Okay, Khalid company issued share capital. Okay, Khalid company issued share capital has remained at 20 million ordinary equity shares. Okay, for many years. On 1st of March 2007, again, I'm going to check my year end, that is the 31st of May 2007. Okay, 31st of May 2007. It means if it ends on 31st of May, 31st of May 2007, obviously it will be starting from 1st of June 2006. Okay, now on 1st, okay, on 1st of March 2007, which means this is something in the mid of the year. This is something in the mid of the year, that is March. In 1st of March 2007, it made a 1-for-4 issue of bonus shares. Now, after reading that particular information, can you please let me know? Can you please let me know the standard for which we are talking about? Yes. Nice. Very good. Excellent. You guys are just like a lion. Very good. EPS. Very good. It's earning per share IS 33. Okay, now. The profit attributable to the ordinary shareholders for the year ended 31st May 2007 was $36 million, and for the year ended 31st May 2006 is $27 million. Okay. Now, what we have to do, the basic earning per share that we need to calculate, IS 33 specifically gives you the guidelines for the basic earning per share and the diluted earning per share. Right now, here in this question, the basic earning per share is discussed, so we are going to discuss that one first. The formula to calculate the basic EPS is we need the profit after tax, that is the profit attributable to group or the profit attributable to company. That is profit after tax and divided by weighted average number of shares. Weighted average number of shares. Yes. Or at times it is also states the outstanding average number of shares. Now, what we have to do, we need to calculate the EPS for the 2 years, that is 2006 and 2007. But here in this requirement, it states that EPS that should be calculated for 2007. But here you can see that 2006 EPS is also required. Why? I will give you the information for this one. First of all, if you just calculate the EPS for 2006, okay, in 2006, the profit after tax that is given in the question is 27 million. It's 27 million. And now weighted average number of shares. So here it states that Khalid company share capital remain at 20 million ordinary shares for many years. It means for many years it was 20 million. There were no additional shares that were issued by the company till 1st of March 2007. It means further bonus shares were issued on 1st March 2007. Till that, there was no change in the shares. So it means the 20 million will be divided over here. Can anyone please calculate the amount of this one? 27 divided by 20. 27 divided by 20. So this will give 1.35, right? It means $1.35. That is the basic EPS of 2006. Let's hold with that one. Well, let's hold with that one. Now let's move on towards the 2007 side. 2007. Again, the profit after tax, which is already given over here. The profit after tax is 36 million. It's 36 million. And now we need the weighted average number of shares, and we know that the company has issued bonus shares 1 for 4. The company has issued one new bonus shares for every 4 shares are already in issue. Now what we have to do, remember, whenever there is a bonus shares, what we have to do, we need to calculate the bonus fraction. We need to calculate the bonus fraction. And now how are we going to calculate the bonus fraction? So the formula to calculate the bonus fraction is calculate. Okay, great, Fatma. Let me check. Okay, bonus fraction. That is shares after issue. That is after bonus issue divided by shares before bonus issue. Now, what is that? What is the fraction over here? That the company will issue 1 for 4. It means the one shareholder that has 4 ordinary shares will get 1 additional bonus shares. You can see your fingers. The one who is having 4 already held shares will get 1 additional shares. It means after the issuance of bonus shares, the shareholder will have 5 shares. And before the issuance of bonus shares, the shareholders were having 4 shares. So that 5 upon 4 is the bonus fraction. That's 5 upon 4. Very good, Fatma. Very good, Maheen. Okay, Ahmad, let me check it out. Very good. So that is 5 for 4 is the bonus fraction. Now we are going to calculate the weighted average. So why there's a need to calculate the weighted average? In 2006, you didn't calculate it. Reason being, whenever there are the shares that the company has issued in the mid of the year, so we need to calculate the weighted average number of shares. Now, since beginning, the company has already 20 million shares. That is at the start of the year. If you just take from the start of the year, from 1st June, we have 20 million shares. That is 20,000 shares or 20 million shares. 20,000 shares in issue. And when the change was arised, it was arised on 1st March. It was arised on 1st of March. It means if we count from the June, July, August, September, October, November, December, January, and February. It means after the period of 9 months, 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 there was a change, that is multiply by 9 and divided by 12. Multiply by 9 and divided by 12. Now, what happened? That on 1st of March, that is on 1st of March, 1st of March, company issued bonus shares. And how many bonus shares were issued? So company has issued 1 for 4. 1 for 4. It means the company was already having 20 million shares. So multiply by 1 divided by 4, which means the company has issued 5 million shares in aggregate. Now the total number of shares would be 25 million. I'm not going to write it down the 5 million. We are going to write down the balance over here. That now the company is having 25 million shares, and this will be till the end of the year. That is that is March, April, and May. It means that is for 3 months. So multiply by 3 divided by 12. Now, what is the requirement of IAS 33? IAS 33 states that okay, now what we have to do? Always remember, IAS 33 states that what we have to do, that the bonus fraction that we have, we need to implement that bonus fraction to all the previously issued shares. Remember, we are not going to implement that bonus fraction to all the shares. No. IS 33 states that assume that these shares, these bonus shares were right from the beginning. So we need to implement that bonus fraction to the number of shares that were in issue previously. So we are going to apply that bonus fraction only to the first line item, not to the second one. Why? Because in this 25 million, there is 5 million of bonus shares. So these 5 million bonus shares, these 5 million bonus shares are already there. So we're not going to apply the bonus fraction to that one. We are going to apply that bonus fraction only to the previously issued shares. Can you guys please calculate the value of the first one? 20 multiplied by 9 divided by 12 multiplied by 5 divided by 4. It's 18.75. Nice. And for the second one, 25 multiplied by 3 divided by 12. 25 multiplied by 3 divided by 12, that is 6.25. 6.25 plus that is 18.75. This will make 25 million weighted average number of shares. What we are going to do, we are going to divide it by the profit after tax. Can you please calculate the EPS for 2007? Can you please calculate the EPS for the 2007? Yes, it's $1.44 million. It's $1.44 million. Okay, now, one thing that we need to understand, that whenever there is a bonus or even the right shares, please listen to me very carefully. IS 33 states that if you are having a bonus or the right shares, what you are going to do, you have to restate the previous EPS. Remember, for 2006, we have calculated the EPS as 1.35. So we need to restate it. How we are going to restate it? Last year EPS multiplied by inverse of bonus fraction. Last year EPS multiplied by inverse of bonus fraction. So the bonus fraction is 5/4. So in order to restate the EPS, it's going to be 4/5. Can you please calculate? Yes, Urusa, I'm showing it. 1.08. 1.08. So the last year restated EPS of 2006 is 1.08 and the current year EPS is 1.44. 1.44. Yes, C is the right answer. Very good for those who attempted that question correctly. Are you guys clear with this one? Please do let me know. Arusa, are you clear with this one now? Fatma, Uruj, Kurutalen, Mahin, Karan, Hamna, Drishti, Deepak. Okay. Now we are moving towards the OT case. Yes. Now we are going to move towards the OT case. Objective test cases. 1st June 2016. It was not written anywhere, but we know that if the accounting period is ending on 31st of May, so obviously it will be starting from 1st June 2016. Arusa, are you getting the point? If the accounting period is ending on 31st of May, so obviously the accounting period will be starting from 1st of June. Okay, now we are moving towards the OT case. That is the OT case. And let's read the requirement and the data for this one. A Granite Company is preparing the financial statement for 31st October 2007. That is accounting year end. Granite Company has a deferred tax liability. After reading out that particular phrase, what guys do you think that from which standard this question has been taken? Very good. It's IAS 12. That is income tax or the deferred tax. Okay. Now, deferred tax liability at 1st November 2006. If you just see that 31st December 2007 is the closing, 31st December 2007 is the closing. It's a closing. So on 1st of November, that is the starting year. If 31st October is the ending date, obviously the accounting period will be starting from 1st of November. Granite Company has a deferred tax liability of $62,000. Can anyone please let me know what is that $62,000? What is that $62,000? What is that? Can you please name that $62,000? What is that? Very good, Arusa. Very good, Uruj. It's a deferred tax liability opening balance. It's the opening of deferred tax liability. Now, this had been caused by the difference of the depreciation charge and the tax allowances. Okay, it's a temporary difference, by the way. Very good, Maheen. Now, at 31st October 2007, that is at the end of the year, the tax base of Granite Company's net assets was 1,80,000 less than the carrying amount. Okay, now it's very important to understand that particular information. Now, any one of you can please identify that what is the meaning of that particular sentence, that at 31st October, the tax base of the company's net assets was 1,80,000 less than the carrying amount. It means the tax base is lower, the carrying amount is higher. Am I right? Very good. Excellent. It's a taxable temporary difference. It's a taxable. It's not the deferred tax liability. Remember, it's not a deferred tax liability. Remember. It's not a deferred, it's a taxable temporary difference. Yes. Carrying amount is greater than tax base. Now, it's a taxable temporary difference that is already given. And remember, it's a closing taxable temporary difference. Now, this has been caused by the difference between the depreciation charge and tax allowances. Okay. And the most important terminology is excludes. This does not include what? The following effects of revaluation. It means this temporary difference of 1,80,000 does not include the revaluation. Now, the Granite Company has decided to revalue its land for the first time on 1st August 2007. That is obviously in the mid of the year, or 2 or 3 months before the year end. A qualified surveyor valued the land on that date as at 300,000. It means the market value is 300,000, and it states that the land had been purchased 4 years ago for $240,000. Now, the value of land was 240,000. That is, the cost is 240,000, but the market value is 300,000. So can any one of you please let me know that what is the difference and what this difference will represent? Yes. Very good, Maheen. Yes, very good. Excellent. This 60,000 is basically a revaluation surplus. Now, we have seen the data. First, let's try to recall that one. Let's try to recall. The opening deferred tax liability is $62,000. And the closing taxable temporary difference, which is already given, is $180,000. And there is a revaluation of land. The revaluation surplus amount is $60,000. That is something we have extracted from the relevant information now. Let's see the requirement. Question number 5. In accordance with the IS 12 income taxes, identify which of the following are the true or false. Deferred tax takes account of temporary differences. We do calculate the deferred tax for temporary differences only. True or false? Yes, please. True. Very good. Excellent. Yes, a true statement. Why? Because we calculate the deferred tax on a temporary differences. If you just see whether it's a taxable or it's a deductible, it's a taxable temporary difference. On permanent differences, we never calculate the deferred tax. Now, second statement. Deferred tax liabilities are discounted to the present value. Are we going to calculate the present value? No. Second statement is false. Why? Because it's a liability. It's a liability of future that we are recording at present. We are already recording that liability at a present value. There is no need to calculate the present value. A revaluation of land will have no impact on the deferred tax liability. Is this the true statement? No, it's a false statement. Obviously, the impact of revaluation will have, the revaluation will always have an impact on the deferred tax liability. Yes. If I ask you a question, and please listen to me very carefully. If I ask you, the revaluation of land will have no impact on the deferred tax expense. If I ask you that question, if I just modify that particular statement, now you just let me know whether it is going to be true or false. Deferred tax expense or income tax expense or PNL. Now, will this information be true or false? Yes, now this is going to be true. Why? Because the impact of deferred tax on revaluation will have an impact on the deferred tax liability, but will have no impact on the PNL. Why? Because the deferred tax on revaluation, the accounting entry would be revaluation surplus debit and deferred tax liability credit. In that case, we are not going to debit the deferred tax account. Instead, we are going to debit the revaluation surplus account. Are you guys getting a point? Okay, now this is the first question related to OT case. Now, second one, in respect of the granite company's net assets and excluding the revaluation of land. Morning, Islam Afaq. Okay, excluding the revaluation of land, what is the general entry required to recognize the movement in the deferred tax liability for the, okay, now it states that excluding the revaluation, it says that exclude the revaluation and let me know the movement, and movement means the increase or decrease. The movement means increase or decrease. Movement means the increase or decrease. Movement means the increase or decrease. Increase or decrease. Now, can you guys please calculate this one? Let me show you the data again. If you want to take the picture out of it, so you can just take the picture of it, and then I'm moving to the requirement set again. Okay, now answer the question. Answer for this question. That excluding the revaluation. C. Okay, let's see. C. Let's see. Ahmed, let's see. Yes, please try this question and let me know answer. Let me know the answer for this one. Afaq C, Mahin C. Okay, C. If I just make a ledger for the deferred tax liability, we are given with the deferred tax liability opening balance, that is, I guess, 62,000. But in this question, the deferred tax liability closing balance was not given. But yes, the taxable temporary difference is already given, which is 1,80,000. And we just need to apply the tax rate, which is 30%. So if you guys can calculate the 30% of 1,80,000. It's 54. Yes, it's 54,000. Okay, it's 54,000. So 54,000 is the closing balance. Why? Because if you will apply the deferred tax percentage on the closing taxable temporary difference, so this will give you the deferred tax liability closing balance. Now, if you just see the balancing figure, we are not going to incorporate the revaluation surplus. Why? Because in this particular question, it states that excluding the revaluation. So if you're just excluding the revaluation, now the balancing figure will be on balancing figure will be on the debit side and with the amount of 8,000. So it means the deferred tax liability is debited and deferred tax expense will be credited, which means this 8,000 will not increase the amount of income tax. Instead, it will decrease the amount of income tax. So the deferred tax liability will be debited by 8,000 and deferred tax expense or income tax expense will be credited by 8,000. If you can match the option with that one. So yes, it's C. Nice, very good. Now question number 7. Again, it's a drag and drop and it's a very easy question. Very easy question. In accordance with the IS 16 property plan and equipment, match the correct tokens with the debit and credit to reproduce the journal entry required to revalue the land only and ignore deferred tax. You just need to enter the, you just need to incorporate the revaluation of land. Excellent. It's a very basic question. So this is a very easy question. How you can test, how you can prepare. This is not the question that I've brought into. This is a question that I've taken from the examiner report, and examiner says that these are the difficult question, guys. Remember my words, please listen to me very carefully. In your exams, 50% most easiest marks like this will always be there in the question, will always be there in the paper. If you have not a very good grip or not a very good understanding of the financial reporting paper, even though you can attempt this question, this is not the difficult one. Always remember the most 50 easiest marks. I said the most 50 easiest marks will always be there in the paper. All what you need to do, you just need to find out, you just need to fetch, you just need to consider those most easiest 50 marks. So obviously the land will be debited and revaluation surplus will be credited. Are you guys getting the point? Okay, now including the deferred tax, including the deferred tax effect on the land revaluation, what is the balance on the revaluation surplus account? Revaluation surplus account. What is the balance on revaluation surplus account? Yes, guys. What is the balance on the surplus account? Should I show you the question again? Afaq, Arusa, Deepak, Fatma, Hamna, Murtaza, Karan, Mahin, Kurutalen, Manshita, Uruj, Ahmed, 18,000. Nice. Okay, great. So first of all, the revaluation surplus that we were having, the amount of the revaluation surplus was, I guess, the value of the land was, if I just move on, 60,000, right? 60,000 was the revaluation surplus. 60,000 was the revaluation surplus, and we know that the deferred tax on the revaluation surplus will be charged to the revaluation surplus account. So it means the deferred tax will be calculated on the revaluation surplus. That is 60,000 multiplied by 30%. That is 18,000, I guess. 60,000 in times 30, that is 18,000. So it means by this amount, the balance on the revaluation surplus will be reduced. Why? Because the accounting entry for this one is revaluation surplus debit and deferred tax liability will be credited. So the revaluation surplus balance will decrease by 18,000. 60 minus 18 is equal to what? 42,000. And we just need to write down 42. Why? Because three zeros are already there. Yes, ladies and gentlemen, is it clear to everyone? 44. 60 minus 18 is 42. Ahmed? Yes, 62 minus 18 is 42. Okay, now this one is the theoretical question and the last one. Remember, in your exams, in your F7 financial reporting paper, examiner has not ever identified or never told this one that I will not be testing for the theoretical parts. No, 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 no. Examiner will be testing for the theoretical parts. Remember, examiner will always be testing for the theoretical parts. Examiner has never stated that I will not be testing for the theoretical parts. So theory is equally important. You have to focus on that one. You have to focus on that one. Okay, now, can you please answer the question for this one? First, you guys try. If you guys try for this one, please. Vanshita, A, okay. Hamna, A. It means only first statement is correct, right? Fatma, B, very good. Okay, Maheen, B, question mark. Okay, let's see. Maybe B, maybe D. Okay, we have B, D. Now we are just left out with the C option. Is there anyone who can answer for the C? Yes, B. Ahmed is very confident. D. Arusa. Neither. Everyone is liar. Arusa is saying that everyone is liar. Okay, let's read the options first now. So because in a statement A, only mistake is whole class of asset, not all property, plant, and equipment. Nice, very good, Fatma. Yes, okay. Granite Company has changed its accounting policy. First of all, a very good thing that is over here that you need to understand as per IS 8 that it's a change in accounting policy. It's a change in accounting policy. Measuring land to revaluation model. It means that we are moving from the cost to the revaluation model, and all items of property, plant, and equipment. Very good stated by Fatma that it is not the requirement of IS 16 that you measure all the property, plant, and equipment. The situation is that whole class of assets should be revalued. It means that if you are revaluing the land, so all lands should be revalued. But it is not required that you measure the furniture and the equipment and the building to the revaluation model. So the first statement is incorrect. Now the second is, if the credit company revalued its property upward, it means it's a revaluation surplus or upward revaluation. For the first time, transfer may be from revaluation surplus to retained earning as the asset is used. Yes, it's a correct statement. Why? IS 16 allows you that you can transfer your revaluation surplus to the retained earning. Now, there are two possible ways. Number one, either you can do it annually. It's an annual exercise. It could be an annual exercise annually, or there is another option that you can do that activity when the asset is de-recognized. When the asset is de-recognized. There are two possible options. Yes, at the time of disposal. Very good, Arusa. So if you are doing at the time of de-recognized, so there is no need to do anything. Just wait for the disposal. Once it will be disposed of, so all of the revaluation surplus balance will be transferred to the retained earning account. But if you want to do it annually, okay, perfect. You can transfer the revaluation surplus to the retained earning, but not the entire balance will be transferred. This will be transferred based on the excess depreciation amount. And how the excess depreciation is calculated? It's a depreciation under revaluation model minus depreciation under cost model. I repeat, excess depreciation will be calculated depreciation under revaluation model minus depreciation under cost model. So this amount of excess depreciation, the amount of this excess depreciation will be transferred from revaluation surplus to retained earnings. So yes, it is allowed. So option B is the correct answer. Are you guys clear with this one? Please do let me know. Yes, anyone having a confusion? Those who were marking for the D, those who were marking for A, are you clear with this concept? Okay. Thank you so much, guys, for joining this session. Let me share with you my contact. That is a WhatsApp number. If you have any problem or any confusion, you can definitely WhatsApp me directly. I have told you at the start of the session that I have also summarized, I have also compiled the examiner report questions for the last 5 attempts as well. Last 5 attempts. I have also compiled those examiner reports. If any of the student or the candidates want that particular file or the explanation of those examiner reports, so he or she can definitely contact me. Or yes, Murtaza, I'll be uploading that session as well sooner, inshallah. So you can definitely view that particular today's session on that particular link. Arusa, you can note down my contact number. You can contact me on a private window, and I will gonna to add you to the relevant link as well, relevant group as well, and I will provide you the recording there. Thank you so much, Fatma, for your wonderful comments. Okay. Hamna, yes, please WhatsApp me. I'm going to add you in that particular group. Okay, don't worry. Yes, please. I have shared my WhatsApp number. You guys can drop me a message and I'm going to respond to you there. Okay, don't worry. Thank you so much for joining the session. At the end, uh, I wish you a very best of luck to all of you who will be appearing for your exams, for whatever the exams you are appearing for, whether it's financial reporting, financial management, or any other paper that you are appearing for June exams. Please remember one thing, that please be confident. You know each and everything. So far, whatever you have studied, from wherever you have studied, it's absolutely perfect. Have faith on Almighty Allah. Have faith on yourself that you work hard, you're working hard, you're giving your best. So it means there will always be a positive outcome. Now, what should be the last day strategy? Last day strategy. Last day strategy. You just need to practice. And now what you need to practice, let me give you the clear direction. You guys must have an ACCA practice platform. You guys having a ACCA practice platform. There you will find out 4 official papers. That is a full flash 3 hours papers. Number 1, that is FR specimen. Number 2, FR practice exam 1. Third, FR practice exam 2. And the fourth one is pre-June mock exam. Now, what you have to do, that if you are having just, I guess, 10 to 12 days are left just before your exams. Now, on a daily basis, you have to attempt these exams. For example, FR specimen, it will take around 3 hours because it's a complete paper of 3 hours. So it means you need to attempt this one. Along with this one, if you are still left out or you haven't attempted the study of practice questions, so you have to attempt all the questions that are available on your study of resource. Remember, examiner is following the study of like a Bible. He's testing the questions from there. So please make sure that please you need to complete with that study of questions. FRX specimen, then On the next day, you will be attempting, or the day after tomorrow, you'll be attempting for the practice exam 1. The day after tomorrow, you'll be attempting for the, after every one day, you'll be attempting, and you make sure before the completion of this one, you will not be appearing for the exams. You have to complete all of these 4 resources. Along with this one, your study of practice questions should be completed. Study of practice questions should be completed. Now, one thing that one of the students said that I'm not able to complete the paper in 3 hours. So the strategy would be that you should start from section A and B. Remember, the area that will give you a chance for the success is section A and B. Section A and B collectively comprises 60% marks. 60% marks. And if you'll be scoring 40 out of that 60, it means your paper is passed. It means that section A and B is very important. You need to complete that section A and B within 1 hour, on 1 hour 15 minutes, 1 hour 20 minutes, 1 hour 25 minutes. But mostly the students are able to complete that section A and B within 1 hour or 1 hour 10 minutes. So it means rest of the 1 hour 30 minutes or 2 hours will be driven towards the section C. So you need to spend there, and you just have to give the best out of it. Try to give the best out of it for the section C. No matter if you're not able to complete your paper, doesn't matter. If you have completed section A and B, and out of 40, if you have completed 30 to 35% marks, and if you have completed 25 to 30% marks even, and you have done it accurately, so it means you are going to ace the exams. There is nothing to worry about it. You're nothing to worry about it. Murtaza, yes, ACCA, you are absolutely right. But remember what I said, that if there is 100 marks question, if there is 100 marks paper, always remember the 50% most easiest marks will be hidden in the question. 50. This is the legacy of ACCA, and it's not the legacy of ACCA. It's the legacy of the entire professional bodies, whether it's an ICAP, it's ICAW. This will always be the strategy of the examiner. Examiner cannot prepare or make a paper, cannot draft a paper which is 100% difficult. It's impossible. 50% most is, you see that one. I have shared that particular OT case. This is not, I have prepared it. This is something that is driven from the ACCA examiner reports. So you just see that I didn't say that all the questions were easy. I didn't say that all of the questions were difficult, but I said, yes, few were difficult, few were very easy. Are you guys getting the point? Still, if you guys have any problem, any confusion, you can definitely drop me a message, and I'm going to inshallah respond you back. So I wish you all the very best of luck, and I pray to Almighty that you guys ace your exams in your first attempt, and you just score a very good marks in that particular paper. Thank you so much for joining this session. Inshallah, we're going to meet you at some other date. Thank you so much. Allah Hafiz.